In its view, tax rises this autumn are not just likely, they're inevitable. And more than that, it believes the government will have to break a central promise it made to voters at the last election. NIESR says a toxic mix of weaker economic growth, lower tax receipts, higher borrowing, and Labor's failure to deliver the welfare savings it planned means the chancellor is now on track to break one of her own key fiscal rules. That rule, the so-called stability rule, is Labor's pledge to get the current budget into surplus by 2028-29. That means bringing in more through taxes and other income than it spends on public services and welfare. Back in March, the government's official forecaster, the Office for Budget Responsibility, thought the chancellor would just hit that target. With £9.9 billion of headroom to spare, a very small margin. And NIESR now thinks Rachel Reeves will miss it by £41.2 billion. That's not just a miss, it's a very big hole. City economists and Westminster analysts broadly agree that the government's finances no longer add up. But NIESR's assessment is particularly stark. It believes the chancellor may now need to find more than £50 billion just to restore the wiggle room she had 5 months ago. All forecasts are wrong, we know that, said Stephen Millard, NIESR's Deputy Director for Macroeconomics. But I'm fairly convinced that there is a sizable gap the chancellor will need to fill. It might not be £50 billion, it could be £40 billion. Labor's 2024 manifesto promised no tax rises for working people and no increases to national insurance or the basic higher or additional rates of income tax or VAT. NIESR believes that pledge is no longer sustainable. Millard says the chancellor now faces an impossible trilemma: rewrite the borrowing rules, cut public spending, or raise taxes. In his view, investors already see the UK as a riskier bet and charge higher rates of interest than before, and departmental budgets have only just been set, making tax rises the only realistic option left. I think it is inevitable that Labour will have to raise one of the big taxes, income tax, national insurance, VAT, and that will affect working people, Millard says. In that sense, unfortunately, I think they will have to go back on the manifesto pledge. NIESR recommends that the government repair the public finances with a moderate but sustained increase in taxes. It estimates the chancellor could raise £8 billion a year by freezing the thresholds of income tax and national insurance beyond April 2028. NIESR points out that raising £50 billion a year will require a 5 percentage point increase in both the basic and higher rates of income tax, although this is not something it recommends. In a statement, the Treasury said the OBR, Office for Budget Responsibility, will publish an updated medium-term forecast alongside the autumn budget. We will not speculate on their forecast. As set out in the Plan for Change, the best way to strengthen public finances is by growing the economy, which is our focus. Thanks to our planning reforms, the OBR has said that the economy is expected to grow by the end of the decade.